You've been taught to save, invest in index funds, and hope for retirement at 65. Meanwhile, Japanese families have been quietly building generational wealth using principles most Americans have never heard of. I discovered this after studying how ordinary Japanese workers consistently outperform Wall Street professionals in long-term wealth accumulation. The secret isn't just what they invest in, it's how they think about money itself. Today, I'm breaking down the Shu-Ha-Ri framework that transforms complete financial beginners into wealth-building masters through 3 distinct stages of mastery. You downloaded a trading app last month and bought your first stock. You think you understand investing basics because you watched a few YouTube videos and read an article about diversification. Japanese wealth masters would look at this approach and shake their heads. They spend years in what they call the Shu stage, while Americans jump straight into stock picking after consuming one piece of content. This fundamental difference explains why most Western investors fail, while Japanese families build lasting wealth. The Shu stage requires complete adherence to fundamental principles without any deviation whatsoever. Think of a martial arts student copying their master's exact movements for months before attempting any personal variations. Japanese investors apply this same rigid discipline to money management. They follow proven strategies without question, without modification, without the arrogance of thinking they can improve upon centuries of wisdom during their first year of investing. Here's the brutal reality that explains your mediocre portfolio performance. 87% of individual investors underperform the market because they skip this foundational discipline stage entirely. They try to innovate before mastering basics. They read about Warren Buffett and immediately think they can pick winning stocks. They hear about cryptocurrency and abandon their investment plan to chase quick profits. This constant strategy hopping guarantees failure. Japanese families internalize 3 non-negotiable fundamentals during Shu training. First, the pay yourself first principle becomes automatic, not optional. They save before they spend, every single paycheck, regardless of circumstances. Second, they develop visceral understanding of compound interest by manually calculating growth projections until the math becomes intuitive. Third, they cultivate complete emotional detachment from daily market fluctuations by checking their portfolios once monthly, never more. The structured saving rituals they implement create unshakable financial discipline. Families set up automated transfers that occur on payday before they can touch the money. They use physical envelopes for spending categories, making every purchase decision tangible and deliberate. These systems remove willpower from wealth building entirely, transforming good financial behavior into unconscious habit patterns. The psychological training runs deeper than most people realize. You must rewire your relationship with money itself, viewing it as a tool for freedom rather than a scorecard for status. Japanese investors develop patience for long-term wealth building over quick gains by practicing delayed gratification in small daily decisions. They choose the longer checkout line, walk instead of driving short distances, and eat home-cooked meals instead of ordering takeout. This foundation stage creates neural pathways that prevent costly emotional decisions during market volatility. When stocks crash, trained investors don't panic sell because they've conditioned themselves to view downturns as buying opportunities. When markets surge, they don't experience FOMO buying because they trust their systematic approach over emotional impulses. The Shu stage typically requires 2-3 years of consistent practice before advancement becomes possible. Most people quit after 6 months because they want complexity and excitement, not simplicity and discipline. Those who persist develop unshakable confidence to weather any market storm and the discipline to stick with proven strategies regardless of external pressure or market noise. After mastering Shu discipline, ambitious professionals face their next breakthrough moment. The Ha stage demands you question everything you learned and adapt those rigid principles to your unique situation. This represents the critical transition from following rules blindly to understanding why the rules exist and when to bend them intelligently. Most financial advisors never teach this stage because they profit from keeping you dependent on generic advice. The harsh reality is that most people never reach mastery. They either stay trapped in rigid Shu thinking, following the same basic strategies forever, or they jump to advanced strategies without proper foundation, missing this crucial adaptation phase entirely. Those stuck in Shu become financial robots, mechanically contributing to their 401k without optimizing for their specific circumstances. Those who skip to advanced techniques become gambling addicts, chasing complex strategies they don't understand. Japanese investors developed a technique called financial fingerprinting during this stage. You analyze your specific income patterns, risk tolerance, and life goals to create personalized investment approaches that fit your reality, not some textbook scenario. A freelance graphic designer needs different strategies than a tenured professor. A single parent requires different emergency fund calculations than a childless couple. Stage investors modify traditional asset allocation based on career stability, family obligations, and personal financial timeline rather than blindly following age-based formulas. Someone with guaranteed pension income can take more investment risks than someone dependent entirely on market returns. Parents with college-bound teenagers need different liquidity planning than empty nesters approaching retirement. The decision-making frameworks Japanese investors use include the three-generation test for major investment decisions. They ask how each choice affects their children and grandchildren, not just their immediate returns. This long-term thinking prevents short-sighted moves that maximize current income while destroying future wealth potential. Questioning fundamental principles leads to breakthrough insights that generic advice misses completely. Someone with irregular income discovers they need different emergency fund strategies than the standard 3 to 6 months recommendation suggests. Seasonal workers learn to save differently than salaried employees. Commission-based professionals develop unique tax optimization approaches. The psychological shift from seeking approval for financial decisions to trusting your adapted principles requires tremendous mental strength. You stop asking friends for investment opinions and start making calculated risks based on personal analysis. This independence terrifies people conditioned to follow expert advice without question. You recognize readiness to progress beyond through consistent profitable decisions and intuitive understanding of market dynamics. Your investment choices start feeling natural rather than forced. You make adjustments based on changing circumstances without second-guessing every move. Mastery means creating investment strategies so perfectly aligned with your situation that they feel effortless and natural to maintain. Your financial plan becomes an extension of your identity rather than an external system you struggle to follow. The Ri stage is where Japanese wealth builders transcend traditional investing entirely and create innovative systems that generate passive income streams most people never imagine. You've internalized principles so deeply that you can innovate and create entirely new approaches to wealth building. This represents true mastery, where foundational knowledge becomes the launching pad for unprecedented financial creativity. This stage remains rare because it requires abandoning the security of proven methods to pioneer personalized wealth systems. Most investors cling to conventional wisdom like a security blanket, terrified of venturing beyond established strategies. They would rather accept mediocre returns using familiar methods than risk creating something uniquely powerful but unproven. Ri stage masters combine multiple investment vehicles in unique ways that defy traditional categorization. They might create hybrid strategies blending real estate syndications, business ownership stakes, and market investments in unconventional combinations. One practitioner develops a system where rental property cash flow automatically purchases dividend stocks, which then fund new real estate deposits, creating a self-perpetuating wealth engine. Japanese investors measure progress through specific milestones and self-assessment techniques. In Shu, success means consistent execution without deviation for 24 consecutive months. Mastery requires adapting principles to 3 different life scenarios while maintaining profitability. Re-evaluation focuses on innovation frequency and system sustainability rather than pure returns. Innovative wealth-building approaches emerge at this level that seem impossible to conventional thinkers. Practitioners create investment systems that automatically adjust based on life changes or market conditions. Their portfolios shift allocation during career transitions, family expansions, or economic cycles without manual intervention. These systems anticipate needs before conscious awareness develops. Practitioners develop intuitive market sense that allows them to spot opportunities others miss completely. They recognize value through unique perspectives and timing that can't be taught through traditional education. This intuition emerges from years of disciplined practice, not lucky guessing or insider information. The timeline reality reveals why most people never reach mastery. Shu typically requires 2 to 3 years of consistent practice. Demands 3 to 5 years of adaptation and refinement. Ri becomes a lifelong journey of continuous innovation and improvement without final destination. This progression prevents the common trap of jumping between strategies without mastering any single approach. Instead of chasing trends and abandoning methods after temporary setbacks, you build sustainable long-term wealth through systematic competence development. Each stage creates the foundation necessary for the next level of sophistication. True Ri mastery gives you unshakable confidence because your wealth-building system becomes uniquely yours yours, perfectly adapted to your specific life circumstances and continuously evolving with your personal growth. You stop comparing your approach to others because you've created something that fits only you. This personalized system generates wealth while aligning with your values, timeline, and risk tolerance in ways no generic strategy could match. The Shu-Ha-Ri framework transforms wealth building from gambling into mastery. Most people spend decades chasing strategies when they should spend years building competence through progressive stages. Each stage creates the foundation for the next level of sophistication. Your next step is identifying which stage you're actually in right now and committing to mastering it completely before advancing. Skipping stages is why most people never build lasting wealth. Start with honest self-assessment. Can you stick to basic investment principles without deviation for years? Or are you still chasing the next hot stock tip? Your answer determines everything.